Now you've had a quick overview of what Bitcoin is. Now, how do you invest in it? Right? If you believe any of that, how do you dip your toe in the water and make money off of this? And the answer is you don't actually have to know almost anything. You don't need to know 99% of what I just covered. If you go to Coinbase.com, you can create an account that will look a whole lot like your brokerage account or your bank account. They take care of everything in the back end. They run the nodes. They handle the keys. All you really need to do is tell them what you want to buy, and it can be Bitcoin or one of the other currencies. And so in reality, it looks just like this. This is a screenshot off of Coinbase. And on the left side, it's showing a bunch of wallets is the term of art, right? So think of those as accounts. So we have a Bitcoin account, an Ether account, two types of Ether, let's not go into that, and a Litecoin account. And on the right side, we just see some transactions. Now, in case you're getting confused, what is Ether and what is Litecoin? Well, those are what we call altcoins, right? Alternative cryptocurrencies. Bitcoin was the first. Bitcoin was the first cryptocurrency on the planet and the only cryptocurrency on the planet for quite some time. There are thousands of these cryptocurrencies out there, and they all fall into two buckets. In the first bucket, they're just copies of Bitcoin with a little bit of changes in the code. So one thing I didn't mention was the fact that Bitcoin is open source. Satoshi created this system and he published it out to the world, not just the white paper, but all the code he wrote as well. So everybody knows exactly how Bitcoin works. Part of the trust in Bitcoin and most of the other cryptocurrencies is the fact that you can go in and look at the code. You can see how it works in its entirety, right? You can't do that with PayPal. You can't do that with Fidelity. You can't do that with Citibank. So it's open source, which means anyone can make a copy. And a lot of people have. They made a copy of the source. They changed something minor. Some of them just changed the name. Some of them changed the rules. And then they said, create a node. Here's how you mine my coin. And some of them took off. So Bitcoin Cash is one of those. Litecoin is one of those. And then I said two buckets. So that's one bucket. The other bucket is they took the ideas out of Bitcoin, but they wrote their own software from scratch because they wanted to do something dramatically different. So the biggest of these is called Ethereum, or just Ether for short. It's about 1/8 the value of Bitcoin. It's the second most valuable coin out there. And the key idea that they added was programmable contracts, automatic programmable contracts. So you could not just, the transactions don't just say send value from person A to person B. It can say things that are way more complicated. Or even more complicated things like A and B are going to send coins to C, but only if A and B both jointly do something out on the internet. It gets complicated. We'll see if that takes off. That's irrelevant for this conversation. Third one on here is Ripple. Ripple is also not a copy of Bitcoin. It's a company. It's got some trust issues. It's a company that created a cryptocurrency that is trying to take on the international wire co-op called SWIFT, the international money transfers between banks. They're trying to do that on a blockchain to make them faster and cheaper and better than current bank wires. As I said, there are thousands of these. And if we just look at the top 7, you go to cryptomarketcap.com, you can get an up-to-date list of the price and the total value of all the coins. And so the day I took this screenshot, one Bitcoin was $10,110. And the total value of all the Bitcoins in circulation right now is $180 billion. And then Ethereum was $218 a coin. If you go to the site, you'll see the prices vary from $10,000 to sub-penny, right? And the total market cap of all the Ethereum coins out there is $23 billion. And then XRP is Ripple, and then Litecoin, and then Bitcoin Cash. And then it keeps going. And I'm not going to go into what each one of these does and whether any of them have any lasting value. What I will say is look at that change column near the right and look at those graphs. That's 24-hour volatility, and that's 7 days of volatility graphed. And you can see that some of the coins moved 3, 4, 9% in one day. Cryptocurrencies are extremely volatile. It is not unheard of for them to double in a month or drop by 50% in a month. The crypto markets, the crypto exchanges, unlike the New York Stock Exchange and NASDAQ, they don't close. The online markets for cryptocurrency are open 24 hours a day, 7 days a week, 365 days a year. There are a lot of them. They're incredibly competitive. There aren't 5 or 6. There are dozens, if not hundreds of them. The best way to think about this stage of cryptocurrency is imagine if gold had just been discovered and the dot-com bubble was going on at the same time, right? Just mash those two together, and that is the frenzy that's going on and has been going on since 2017. Between 2008, when the white paper came out, and 2017, not a whole lot happened. There wasn't a whole lot of interest in this new thing. There wasn't a whole lot of exchanges that themselves were trustworthy. It was pretty hard to turn Bitcoin into dollars and back again. And then in 2017, it just started taking off, and it's been extremely volatile ever since. The other thing that showed up starting in 2016, 2017 was this idea of initial coin offerings. So as all of these altcoins started showing up, and as this wave of cryptocurrency startups showed up, someone stepped forward and said, well, we should raise money using cryptocurrency. We should do, instead of raising money from angel investors and then head off to try and be acquired or go public, why don't we just sell them tokens, right? The generic term for a cryptocurrency, a unit of cryptocurrency, is a token. So Bitcoin is a token, Ether is a token, one Litecoin is a token, and so forth. Now, we use the term token because often when we look at ICOs and when we looked at crypto businesses, often the thing that you're buying, this thing that we would otherwise call a coin, is actually the payment you're using for the service. So it's kind of like when you go to the laundromat sometimes, the machines only take tokens. Growing up on the East Coast, when the toll roads stopped being a dime or a quarter, they also started selling tokens, or the subways and so forth. So just think subway token in your head. Now the trick here in terms of ICO, what makes them interesting is the tokens are the method of payment for the service, but usually when they do the ICO, the service doesn't exist. Usually what they're doing is that they're selling the tokens early to speculators, maybe we'll call them investors on a good day, but they're selling these coins to anyone who wants to buy them in the expectation that someday the service will launch and the customers will buy the tokens back from these initial investors. The investors are not buying equity in the company. They're not buying ownership. If the company succeeds wildly and goes public, the founders keep 100% of the equity. The buyers of these tokens are speculating that the value of the token will go up. And I'll have more on that in the future. But next time, in the next lecture, we're going to talk about the blockchain. We're going to leave the world of cryptocurrency, focus on the blockchain, and say, what can the blockchain do?